well, as we wait to see if we're going to close above that Dow 50,000 level, here we go right now. We're at 50,159. We're looking good. We've got 3.5 minutes to go. I don't want to jinx anything, but I'm feeling pretty good about this. Let's take a look at shares of Goldman Sachs, because this stock added the most points since the Dow hit 40,000. Now, the next stock that's added to this 10,000 point roll, Caterpillar, and then take a look at IBM. So those are the big contributors that you've seen from 40,000 to 50,000. Now, things could change next week. We're going to get two pieces of key economic data that could go either way for the markets. Wednesday, we're going to get the January jobs report at 8:30 a.m. Eastern Time. Friday, 8:30 a.m. Eastern Time, the Consumer Price Index. Let's take a look at the major averages for the week. As you can see here, the Dow powering up for the week with a gain of 2%, a little over 1,000 points there. S&P and the NASDAQ looking for the week anyway to be lower. Let's bring in Cetero CIO Goldman. And, you make a good point. You say this is just a market that's catching its breath.
And Cheryl, thank you for having me on your show. Definitely. Right now, the markets, up until today, the markets were going through a classic worry phase. We had this rising uncertainty with rates, Bitcoin, dollar, tech leadership. Volatility is definitely going to pick up, and we could see a further pullback. I know today seems like an exception, but this is just a market adjustment. It's more about the markets are pricing risk, not the economy rolling over, and not the start of a bear market. Remember, historically, to have a bear market, you need a recession. You look, since World War II, we've had 3 bear markets without a recession: 62, 87, 2022. We need a recession to have a bear market. We don't see it. The economy is still holding up better than expected. Corporate earnings are solid. Healthy market rotation we're seeing as we move away from these mega caps into small, mid cap value. And of course, high yield spreads are not showing really any stress. So we think it's a buying opportunity, as we've been saying every time markets pull back since 2022.
Well, you predicted that we were going to see this rotation out of the mega caps, but the Mag 7 in particular, Gene.
Yeah, I mean, the writing was on the wall. Basically, you think about this, and you had high valuations in AI technology. We think AI and technology for the future is phenomenal. It's a great opportunity, but valuations were super high. And if you think about this, historically, when the Fed has cut rates, usually you see a widening market breadth, especially in small caps and mid caps. And here's the beauty. Here's the gold that we talked about earlier. The gold of it all is basically this: is that you have attractive earnings valuations, better in small and mid cap, and more attractive valuations and more stronger economic and earnings growth. All great news for small and mid caps.
And I want to say, small and mid caps, we've seen that investment actually happen in the first month of 2026. But real quick, healthcare, industrials, financials, you're looking to other sectors to make money right now.
Yeah, we're looking more in the value sectors and sort of those really conservative growth areas. And again, we like healthcare. Healthcare valuations are attractive, aging demographics, of course. Industrials, you've got defense spending, geopolitical risk is increasing. And then financials are starting to look even more attractive, given great valuations, strong balance sheets, strong profiles. You take all these together, we are really leaning into those really areas that are really undervalued, especially in the value side.
Yeah. Well, we've got the fireworks going, Gene. Take a look at your screens, everybody. Dow 50,138. What a day. We just made history.